Here are 5 of the most common ways to invest your money, and I labeled these in order of smallest return to biggest return, but they also come with smallest risk to highest risk. Now, one of the things that you can do to limit your risk and increase your returns is just to invest in your financial education, meaning learning how to invest, knowing what's going on in the markets. That way you can make better decisions with your money. I have tons of videos on my channel that go over that type of financial education. And if you do want to stay up to date on what's happening in the financial markets, that way you can make better decisions with your money, well, that's why I created something called Market Briefs. It's a completely free financial newsletter that covers what's going on in the stock market, the real estate market, the crypto market, inflation, and the global economy. It's completely free, and it's an easy way for you to stay up to date on what's happening. That way you can make better decisions with your money. So if you want to join Market Briefs for free, I'll put the link to how you can join down in the description below. Now, if we talk about your savings and CD, well, this is your traditional place to park your money. But the reality is you are not going to get big enough returns here or here to actually grow your money into something significant, because CDs and savings accounts pay next to nothing. So I'm just going to cross these out. Then when it comes to stocks and real estate, these are interchangeable. Some people will tell you the stocks get better return. Some people will tell you that real estate gets you a better return. This is really a matter of personal preference. I've invested my money into the stock market and the real estate market, and they both can do really well. And they both can lose you everything. It goes down to your financial education, your interest, and how involved you want to be. And the nice thing, I'll get into this in a little bit, is with both of these, you can start investing with as little as $100. Yes, you can get exposure to real estate with as little as $100. You're not going to be able to buy the entire property, but you can get exposure to real estate through real estate funds. So this is going to be interchangeable as to which one's going to give you more risk or give you better returns, but that I'll leave up to you and what your interests are. Then you have business. Now, for, again, the majority of people, this is not going to be something that's interesting or applicable, because starting and owning your own business is difficult, very time consuming, and not everybody wants to operate a business or should operate a business. And even if you don't want to start a business, you can buy a business. But again, that's very time intensive, and it's not for the majority of people. So I'm not going to talk about this in this video. I'm going to focus in on here. I'm not going to talk about the alternative investments, things like cryptocurrency or gold or the other alternative investments. I have other videos talking about that, so you can research that on my channel. I'm going to focus in on these 2 things, stocks and real estate, as a way for you to invest your money and build wealth. Now, to invest in stocks and real estate, there's a number of different ways that you can do that. The first way to invest your money would be to using a tax-deferred retirement account, something like an IRA or a 401k. This also includes the 403bs and everything else. They all work very similarly. The whole idea here is you invest your money into an account that gives you tax advantages, because now you can't pull your money out of this account until you hit retirement age. If you try to pull your money out earlier, you're going to have to pay a penalty. And then when you hit retirement age, you can pull the money out, and that's when you're going to pay taxes. Unless you use a Roth version where you pay the taxes up front, then your money can grow tax-free, and then you pull the money out tax-free. Now, you have some subtle differences between your 401k and your IRA, but the main difference you have to understand is that the 401k is a retirement account that you get from your employer. The IRA is a retirement account that you get outside of your job. This is something that you have to go out and create yourself. So this is what it looks like. You have this income stream right here. Let's call it your job. Your job pays you. And now if you put your money into a traditional 401k or IRA, you are going to bypass paying taxes, and you're going to put this money into an investment account right here. This is your 401k. This could be your IRA. And now if it's a traditional 401k or IRA, you don't have to pay any taxes when the money goes in. Now this money can grow, be invested, and compound tax-free. And then you hit retirement age, and that's when you're going to pull the money out, and that's when you're going to pay taxes. Now you can compare this to something like a Roth 401k or a Roth IRA. This works a little bit different. Right now you have your income source right here. I'll call it your job again. You make money, and then you're going to pay taxes. TAXES. Oh my God, my letters are not working. So now you're going to pay taxes, and then your after-tax dollars are going to go into this investment vehicle. So now you have less dollars going in because you paid taxes on it first, and now this money is going to be invested. It's going to grow and compound, and then when you hit retirement age, that's when you're going to be able to pull the money out, but now you've already paid taxes on it, so you don't have to pay taxes on the back end. Now, there are some subtle differences where sometimes you do have to pay taxes here depending on how this money was earned and what's happening there. And this money can then be invested in the stock market or the real estate market. There are ways that allow you to invest your money into real estate with a 401k and an IRA. In an IRA, you need a self-directed IRA. Same thing with the 401k. There are solo 401ks that allow you to invest your money in real estate. But now, you invest your money in these vehicles, and now you're going to be able to go out and get this growth tax-free. The 401k and IRA both have limits to how much money you can put into your investment account every year. And when you're trying to decide what's better for you, this is where you have to ask a couple questions. Some people say that this is better, to do the traditional IRA, because the whole idea is when you hit retirement age, you're not going to have an income, so your tax rate is going to be lower. So you're not going to have to worry about the taxes because you're just not making as much money. So you'll effectively have a lower tax rate. The argument here for the Roth IRA is, well, no one knows what the tax rate is going to be when it comes time for you to retire. And if the tax rate is a lot higher, you could be paying a penalty by waiting to pay taxes. And so you have that advantage of paying taxes when the money goes in. And now your money can grow and you can see more potential upside if your money grows a whole lot. And now you don't have to worry about the income. Me personally, if you want my opinion, I don't like the idea of taking this risk and waiting to see what the tax rate is going to be on one end. And on the second end, I don't like the idea of not planning to have any income when I'm older. I am working my income and my businesses to have a lot of income when it comes time for me to hit my 60s or my 70s. So for me, that would make no sense because I'm working to grow my income every single year. So I would not follow that whole persona or idea that I'm not going to have any income when I'm in my 60s. Second, the national debt keeps growing, and on a more economic level, if the government's debt and expenses keep growing, that typically would mean higher taxes. So if I had to guess, again, this is just my prediction, I would say the taxes are going to be higher in the future than they are now, just because of the way that our economy is changing. Now, second, on the whole idea of an IRA and 401k, I'm personally not a huge fan of the traditional idea of retirement. The traditional idea of retirement meaning I work until I'm 65 or 70 years old, and then once I hit that age, I stop working because now I have enough money or wealth built up. I don't like that idea. I want to work until I die because I love what I do. Now, I get it, not everybody can do that, but I really believe that whole idea of those who retire early, die early, because when you follow the old pattern of just working and then not working, I've seen this happen to people in my family where you hit retirement age and then you just sit on your sofa, watch TV all day long, and you do nothing productive. And that's when you start to see all those health issues pop up immediately because now you have no purpose, you have nowhere to go, you're not doing anything. So I don't like that idea of retirement. And for me, I'm not a huge fan of these traditional retirement accounts because of all the restrictions that they put on you and all of that. And this is where just basic education of your 401k and IRA are so important because many people don't understand how their 401k or IRA work and they just throw their money in there without understanding the fees. And the thing is, when you put your money into your 401k or IRA, you're essentially, for most of the time, giving your money over to a money manager. And if you don't know how much they're charging you, well, chances are they're probably overcharging you. And this is why I like to be in charge of my investments because I like investing my money. I like doing that research. This is something that I'm interested in. It's something that I do a lot of. So for me, an IRA or 401k doesn't make sense. I don't have either one of these. I invest my money myself because it gives me more control, it gives me more freedom, and I want to be able to control and access my money however I want. And if you invest your money yourself into businesses and real estate, you can actually get bigger and better tax breaks than you get here. So for me, this is not interesting. But for the majority of people, if you don't like the idea of going out and investing in real estate, if you don't like the idea of managing all of your investments, this is a great way to start. But you don't want this to be your only investment. You also want to be investing outside of your 401k and IRA. That way you can build your financial education and grow your wealth and achieve your financial goals. If you enjoyed this short clip from my longer videos, here's another clip that I think you'll love. And while you're at it, if you're interested in learning more about how to start generating passive income, our team put together an amazing guide on how to start generating passive income for free. All you got to do is click that button right over there. Thank you for watching, and as always, keep hustling.